Every month, you hand over money for car insurance, but most people have no clue what they're actually paying for or whether a single accident could financially wipe them out. So you do one of two things. You buy the cheapest policy and pray, leaving yourself dangerously underinsured, or you overpay for coverage you don't need because a salesman scared you. Both quietly cost you. In the next few minutes, you'll understand every major coverage type in plain English and know exactly how to shop so you pay the lowest fair price for the protection you genuinely need. Start with the big one. Liability coverage. This pays for the damage and injuries you cause to other people. It's the part almost every state legally requires you to carry before you can drive. Liability has two halves. Bodily injury covers other people's medical bills if you hurt them. Property damage covers their car, their fence, their mailbox, anything of theirs you smash. It doesn't pay for your own stuff. You'll often see liability written as three numbers, like 100, 300, 100. That simply means 100,000 per person injured, 300,000 per accident, and 100,000 for their property. Now the trap. State minimums are often tiny, like $25,000. One serious crash blows past that in an instant, and you personally owe all the rest. Carry higher limits. It's shockingly cheap protection. Now coverage for your own car. Collision coverage pays to repair or replace your vehicle when you crash into something, another car, a pole, a guardrail, or you flip it. Your fault or not, your car is covered. If you have a car loan or lease, your lender almost always demands collision coverage. If you own an old beater outright that's barely worth anything, you might choose to skip it and pocket the savings. Next up is comprehensive coverage. This one's for all the chaos that has nothing to do with crashing. Think theft, fire, hail, floods, falling branches, vandalism, and a deer leaping into your headlights at night. People mix these two up constantly, so remember it simply. Collision is you hitting something. Comprehensive is something hitting you when you weren't even driving. Together they protect your own car from almost anything. Now, one that people skip and then deeply regret. Uninsured and underinsured motorist coverage. This protects you when the person who hits you has no insurance at all or nowhere near enough to cover what they did. Think about it. Millions of drivers on the road carry no insurance at all. If one totals your car or injures you, this coverage steps in so you aren't left paying for someone else's mistake. Then there's medical coverage for you and your passengers. Depending on your state, it's called medical payments or personal injury protection, often shortened to PIP. It pays your medical bills after a crash, no blame needed. In no-fault states, personal injury protection is required and can also cover lost wages while you recover. The exact rules genuinely vary by state, so check what yours mandates before you assume you're covered. Now the single most misunderstood word on your policy. The deductible. This is the amount you pay out of your own pocket before insurance pays the rest, and it only applies to your collision and comprehensive claims. Now the trade-off that controls your price. A higher deductible means a lower monthly premium, but more cash out of pocket when you crash. A lower deductible costs more monthly, but cushions you at claim time. The smart move. Raise your deductible to $500 or $1,000 only if you have that money saved in an emergency fund. You pocket lower premiums every month and can still cover the gap. Think this doesn't matter much? The average car insurance bill runs well over $2,000 a year, and identical drivers can get quotes hundreds of dollars apart from different companies for the very same coverage. Read that again. Same driver, same car, same coverage, yet one company charges far more than another simply because of how they crunch their numbers. Loyalty to one insurer often means you're silently overpaying. So how do you shop smart? Step 1. Get quotes from at least 3 to 5 different insurers for the exact same coverage limits and deductibles. This is the single highest paying hour you'll spend all year. Step 2. Bundle your policies together. Combining your auto insurance with your home or renter's insurance under one single company very often unlocks a meaningful discount on both of them. Always ask what bundling would save you. Step 3. Hunt down every single discount. Safe driver, low mileage, good student, paperless billing, paying in full, and even telematics apps that track your driving can all quietly shave real money off your bill. Step 4. In most states, your credit score quietly affects your rate, so keep it healthy. A handful of states ban this practice entirely, but where it's legal, better credit can mean a noticeably lower premium. Step 5, and this is the one almost everyone fails. Do not just auto-renew. Insurers quietly raise loyal customers' rates over time, betting you're too lazy to check. Review your policy every single year. Once a year, pull fresh quotes and reread your own coverage. Did you pay off the car? Move, add a teen driver, buy a cheaper vehicle. Your life changed, so your policy probably should too. Now the empowering part. Insurance feels confusing on purpose, but you just learned more than most drivers will ever know. You're no longer guessing. You can read a policy and spot a bad deal. One focused afternoon of comparing quotes could save you hundreds of dollars a year, every year, for the rest of your driving life. That's real money back in your pocket for doing a little homework. So lock it in. Liability covers the damage you cause others and is legally required. Collision covers your own car in a crash. Comprehensive covers theft, weather, and animals. Those three are your core. Then add uninsured motorist coverage to protect you from broke drivers and medical or personal injury protection for the hospital bills. Finally, set a deductible you can actually afford to pay out of your own pocket. And to pay the lowest fair price for it all, compare several quotes, bundle your policies, claim every discount, protect your credit, and review your coverage carefully every year instead of just blindly clicking that renew button. So here's your challenge this week. Dig out your current policy and actually read what coverage you have. Then pull just one competing quote for the same coverage. You might be stunned at the difference. Quick question for the comments. What are you paying for car insurance each month, and have you ever actually shopped around, or do you just let it auto-renew? Tell me below. I read every one. If this finally made car insurance make sense, like the video so more drivers can find it, subscribe so you catch the next money lesson, and send it to that one friend who's definitely overpaying right now.